Hello everyone and welcome to your show, A Trader Speaks to Traders. My name is Benoist Rousseau. I've been trading for over 30 years and I'm a member of the CME and the CBOT in Chicago. I'll keep it brief. I have an emergency. I've been trying to record this show for 2 hours now. It's about to be 8 o'clock and I've been at it since 6 in the morning. The computer keeps crashing. Windows, I hate you. Blue screen, the sound didn't work. So I'm going to do this super quickly because I can't take it anymore. I'm really fed up. Very quickly, the FOMC. Yesterday it amounted to absolutely nothing. The Fed president stuck to his role. He said several times that he analyzes the numbers and acts according to the numbers. So he's not a politician. That's the image he wanted us to understand. And so he's not there to make people dream. Politicians are there to make people dream if they want to get elected. But the president of the Fed, he's an economist. He looks at reality, at the facts, at the numbers. One positive point, the Fed is no longer worried about the dynamics of the job market. She had raised a bit of a warning at the last meeting, but now she's satisfied. The job market is dynamic, but inflation in the United States is too high, which basically means, to put it simply, Donald Trump, the rate cuts. Not right away, let's say maybe in June. That's the investor's estimate, since the president of the Fed has decided not to give any information about a possible rate cut. And he greets Donald Trump for that, but in any case, the White House would never have been satisfied. So even if he had lowered rates by 0.25, the White House would have wanted 0.50, and if he had lowered rates by 0.50, the White House would have wanted 1%. So that's basically the message from the president of the Fed. I'm doing my job, you try to do what you can. Second very important thing, we had the results from Microsoft, Tesla and Meta. If I sum it up, a little bit disappointed. Overall, since they're announcing necessary investments of hundreds of billions of dollars and Wall Street is starting to ask questions. It's great, it's innovative, it's fantastic, but with so much investment, what will the outcome be? In the end, profitability over several years. So for example, when Tesla released its results, there was revenue growth. And it's after that, by 3.5, that the percentage increased sharply. And then they all lost out when analysts started to notice that they were going to double their spending, especially to put androids into their production lines. That costs an enormous amount, but it does have certain advantages. Androids rarely get tired, don't demand union breaks, and most importantly, they're not unionized for now. Let's take advantage of that. Who knows what the future holds? We don't know if one day there will be an Androids Association or an International Androids Union, but for now we're pretty much in the clear on that front. But let's not doubt that governments, at least the French government, which is quite prolific when it comes to taxes, will eventually create specific taxes for each Android. These taxes will be collected to provide the bare minimum for humans who, in the coming years, ultimately won't be of much use anymore. There you have it, things are going well for them, because they're using artificial intelligence to target us even better, to know our desires even more precisely. And they're fully connected. And that increased the results of their advertising campaign by 26%. So we're being perfectly targeted. The AI understands that if every day between 8 o'clock and 8:30 p.m. we disappear from social networks or the internet, it's because that's when we go eat. So at 7:45 p.m., what does it send us? Ads for meal delivery services. So it might not seem like much to you, but that's exactly what's happening. We have a profile and they know when we rest, when we sleep, when we eat, and the sites we visit. So if you visit BMW, Opel, or other car manufacturer sites 2 or 3 times, Tesla, because we talked about it for 2 or 3 weeks, you're going to be flooded with car ads as soon as you browse different sites, to eventually make you give in and switch from one manufacturer to another. I'm checking the technical analysis because I'm afraid it's going to crash again, so I'm speeding up. So for the technical analysis, it's simple. Here it is. I'll do it quickly for you. CAC 40. They're useless, always at the bottom of the range. Yesterday we hit the bottom and we had a small rebound, so that's a little bit positive. It managed to recover. But be careful, it can't get past 8,200. It's a barrier that's almost impossible to cross. The DAX 40 is in a very clear range over the past 2 weeks. It's moving, but over a whole week it doesn't move at all. It's in a range, but it hasn't been hit. Its annual low, like the CAC 40, still has some room, so the CAC 40, not positive, the DAX is trying to pull through. The Dow Jones is right in the middle of its 15-day range, and since the beginning of the year it's been waiting. It's a little above 49,000. Yesterday it bounced back nicely when it hit 49,000. Those were trades that were pretty quote-unquote straightforward. It is quite easy to take if you are currently trading on the Dow Jones Industrial Average or perhaps the Nasdaq Composite. That particular market index really didn't move much at all today. There's no excitement. So what is certain is that there is no excitement. So be careful, I'm telling you, in everything I've read in the Financial Times, Wall Street Journal, and so on, investors are questioning this so-called profitability. AI is amazing, but 10 billion, 100 billion, 280 billion to be invested in AI over the next 2 years for Microsoft in particular. Isn't that excessive? And if they invest 280 billion to get back 100, is it really worth it yet? But you have to look ahead. It's like the internet. At the beginning of the internet, there was nothing, absolutely nothing. It was uncharted territory. And now it's everything. Well, AI is pretty much the same. It would be the same thing, but telling investors that it's going to be super profitable in 10 years or 5 years, that still seems very far off to them. That's why there's not a frenzy. Be careful with the Nasdaq. These are the interpretations we've had from the Asian and European markets. Be especially careful at 3:30 p.m. Things can start moving very quickly. The bosses will decide whether it was good or bad news. Yesterday, S&P 500. Same thing, it's above 7,000 points, so that's good. It's benefiting from the Nasdaq's momentum, but again, same thing. Caution, a bit of prudence. Gold, it's their absolute safe haven. As soon as Donald Trump says he's going to bomb Iran, gold gains $100, reaching a new annual high, an all-time historical record. We have an exponential curve, so be careful, it could keep rising. If, in fact, there are massive bombings by the United States of America on Iran. But as soon as it's over, it could start dropping again. Right now, it's such a rapid acceleration that we might get 1 or 2 more, at most. After that, we risk seeing a slowdown. So, as I told you yesterday, now's the time to check your drawers and go see your old Aunt Janine, whom you haven't seen. If that's not shameful, really. If it's been several months or even several years, now's the time to go see her. Because old folks, they have gold, yes, they're less happy than us, they don't have patient bitcoins. As for Bitcoin, Paris keeps dropping. You said that the $90,000 mark might be hard to break. It crossed it 3 times yesterday. Each time it went above 90,000, it got slapped back down. So, in conclusion, if you're old and you have gold, you're super trendy. If you're young and you have Bitcoin, right now you're just a big idiot. On that note, I'm sending you hugs. I hope the video works this time. There you go, and just know that this time I won't be doing it a 5th time.